news. Let's take a look at what's moving the markets. So Asian shares plunged to a fresh 11-month low as fears of a regional conflict in the Middle East intensified and a relentless rise in long-term U.S. yields pressured variations, while supply concerns lifted oil prices further. So the Shanghai Composite Index and the Hong Kong Hang Seng Index dropped 0.7% each. Japan's Nikkei finished 0.5% lower. Let's go to Wall Street then. U.S. stocks ended lower yesterday with shares of Tesla down sharply and Treasury yields surging after Federal Reserve Chair Jerome Powell spoke about monetary policy and investors worried about whether rates would stay higher for longer. The S&P 500 lost 0.85%, the Nasdaq Composite lost 0.96%, and the Dow Jones Industrial Average fell 0.75%. So the JSE is trading lower today. The all-share index shed 0.8% to 70,397. The industrial 25 index is 0.3% down or lower. Financials are 1.3% weaker, and the top 10 resources index has declined by 0.8%. Markets in Europe are also in the red. Britain's FTSE 100 has shed 0.9%, and the CAC 40 in France, as well as Germany's DAX, are 1.2% lower each. Looking at commodities, gold is trading at $1,983 an ounce, platinum at $898 an ounce, and a barrel of Brent crude oil at $93.41. The rand is trading at 19 rand and 9 cents to the dollar, 23 rand and 14 cents to the pound sterling, and 20 rand and 21 cents to the euro. Let's get some analysis with Viv Governor from Rand Swiss. He joins me now. Viv, thanks so much for your time on SABC News this afternoon. That conflict in the Middle East causing uncertainty in most major markets.
Yes, I mean, the stuff in the Middle East at the moment, these kind of conflicts can often, tick off. The famous example, of course, when he uses is World War I, where a single assassination caused the world to go to war effectively. Here, it right now seems to be contained. It seems all parties want it to be contained. The Israelis, the Americans, and the Iranians really don't want to get into any kind of fight. China definitely doesn't want to get involved in this, and I think Russia is too busy in the Ukraine. I don't think there's a desire for anybody to get this thing accelerated, but unfortunately, you never know what can happen. And that's what the market is fearful of at the moment, the uncertainty that's happening, especially because we're going into a weekend where many markets are going to be closed for 2 days.
Viv, let's go to the US. Yesterday, we saw Fed Chair Jerome Powell give some remarks. What would you say the most important ones were coming out of that? And could the US see more sustained rate hikes?
Yeah, look, he did come out and say that, he does think that inflation is too high in the US. And I think that's obvious from, the target is 2%. It's currently 3.7. It's almost double their target. Yeah, it's far lower than it was a year or so ago when we were above 8%. But, at the moment, 3.5%, 3.7% is too high. Also, he is saying that rising bond prices are helping him because, obviously the higher bond market, is making it more difficult to borrow, which is obviously what he wants to have done. And look, I mean, we mustn't get away from the fact that what he really is trying to do is trying to slow down the U.S. economy. And the fact that the inflation is still too high means that the economy has to slow down even more in order to get inflation under control, which puts us closer to the chance of a recession.
Okay, and then if we stay in the US, we know that it's earnings season. Yesterday, the big stories for me were Netflix and Tesla. Netflix much more upbeat than before. Tesla not doing so well. What stood out for you when it comes to earnings season?
Yeah, look, I mean, Tesla has embarked on a very aggressive price-cutting, policy. I mean, it's been cutting the price of its cars multiple times by more than double digits. Percentage-wise. So that's a huge, gamble it's taking. What it's trying to do right now is try to become effectively, control the EV market. At the moment, there is an ongoing and ramping up strike in the automobile sector in the US, which Tesla is not affected by. And I think Elon Musk is trying to basically get as much advantage in this into the market share as he can in the scenario. That being said, he's cutting prices so much that his revenue is missing. I mean, I think they missed revenue by close to $700 million, which is a huge miss for them. And I think that this is a gamble. And the next thing he's going to do as well is also a gamble. The Cybertrucks. I don't know what's going to be the situation there because it's a very aggressive, a very different kind of design. Tesla looks like other cars. The Cybertruck looks like nothing else. With Netflix, their policy seems to be working. They had a better than expected subscription growth. It seems that the idea of cutting back on sharing of the passwords is working, and the market seems to like that as well.
Okay, let's go to Asia. We saw their markets touching 11-month lows. It's those Middle East tensions and also, I think, the worries about the property sector in China that seems to be dragging Asian markets down. Is that a correct assessment, Viv?
Yeah, most certainly. The property sector, of course, everybody knows the Chinese property sector is under a huge amount of pressure at the moment. We've had, famous, defaults by places like Evergrande and so on. But I think what you also not forget is just the geography of the situation in the Middle East. Yes, we all think Saudi Arabia produces oil and all these places produce oil, but oil doesn't go everywhere in the world evenly. This goes to certain places more than others. And the oil that comes out of the Middle East tends to go to Asia. It goes to China, it goes to India more than other places in the world. And that is why I do think that, those particular countries, especially China and India, are very vulnerable if there's a conflict. There's a thing sort of Iran called the Straits of Hormuz. There's a little gap of ocean, a sea basically between them and Oman, Iran and Oman, the Straits of Hormuz. 1/5 of the world's oil travels to there. It's basically 45% of China's oil and gas needs come from that. India, it's more than half of that. If there was a war and that particular bit of sea was closed off because of mining or whatever other reason, those are the countries that will be most badly affected, China and India. And emerging markets will be suffering as well because of that. So yes, we must take into account that Asia is probably going to be more affected by any kind of Middle East conflict than, for instance, the US is.
Okay, and the JSE being down earlier on this morning and at lunchtime as well, that's a global story?
Yes, most certainly. I mean, you're seeing every market at the moment down. So the US Dow, the S&P, the Nasdaq were all negative yesterday. You see Europe negative today. We saw Asia under pressure as well. So yeah, we're kind of following what the world is doing at the moment. And you can see that by the fact that even though the market's falling down, the currency is pretty much range bound at the moment, just either side of 19 to the US dollar.
If you had to characterize the week that was in the markets in a few words, Viv, what would you use?
Unexpected, it was. We've been 2 weeks ago. No one would have thought this was even a worry at the moment. People worried about the Ukraine, worried about a number of things. Now, a Middle East conflict is coming online, and the world is much more chaotic than it's been for a long time.
Okay, Viv Govender, Portfolio Manager at Rand Swiss. Thanks so much for your time on SABC News this afternoon, just giving us some analysis into what's moving the markets locally and internationally. It's time for a short break. When we come back, we're going to bring you SME on Point. Do stay with us on SABC News.